Good afternoon, everyone. Steve Georgie here from Allendale's Trading Floor. It is April 1st, so big report last Thursday, and it was bearish in corn. And once again, the market was down today, down another 53 cents. We had 60-cent limits today. We didn't quite go down limit, but we did finish about 53 lower. Still very negative. We've seen a 93-cent slide over the last 2 days. We had beans down 14 today, wheat down another 22 cents. So still finding some pressure. We still are trying to play out what's going on here and what these numbers really meant. So we know the quarterly stock number for corn certainly was negative. We're going to need to see some adjustments on this next supply and demand report that will be out on April 10th. So we know we're going to need to see some adjustments. It's just a matter of where are we going to see them. This feed and residual category is probably where we're going to see the biggest adjustment and find the biggest hike there. But it was bearish. We may have some more downside. The charts are still very negative. We closed below 650 today in that corn. That may take us down another leg here, but we'll see some reaction. A lot of guys are hoping for more of a turnaround Tuesday type attitude. We did see a gap lower today from the close that we had on Thursday, so we'll see if we can try to gain some of that back. But the overall attitude is still very negative, and may remain that way until April 10th, the next USDA report. We did have we had good to excellent ratings out today for the winter wheat crop, first ratings since fall when it went into dormancy. It went into dormancy right at 33%. We did see a 1% improvement today. 34 came out. The trade was expecting to see about a 1 to 2% decline. We actually got an increase. So that may give a weaker start here to the wheat market overnight and continue to pile on some of the losses that we've seen here the last few days. The dollar was down 27 cents today, 82.90, with crude oil falling back about 30. So very negative day across commodities. And crude oil, though, sitting at 96.91, still holding that $95 support. We've gotten some pretty strong moves in the energies over the last few weeks, and today's little setback probably isn't much. The charts still look very friendly as far as energies, and may find another push higher yet this week as well. As far as cattle, down about 22 cents. We did see a stronger finish to the week last week. Cash cattle trading a little bit higher, and that got the market all hyped up. But we're going to need to see another consecutive week higher for cash trade. So we've got to continue to get that going and continue to stay strong before we see the futures react and continue to push higher. As far as hogs, though, maybe we've turned the corner. We typically see more of a seasonal low come in here on April 1. That's today. We were up 62 cents for hogs. We saw a strong finish last week. We may finally turn that corner here, but we've got to continue to see cash hogs firm up as well. So we've seen some choppy back and forth trade over the last while, and we've got to see some consistency there and see this trend start to form in some stronger prices. Looking for the summer months still to gain and still to see a pretty healthy market going into summer. But this seasonal rally starts now going into basically June. But we'll see if that does happen. Watch the cash market on that. So on grains, overnight, look for a little bit lower start. Maybe we could find a little support, maybe try to get the markets to kind of calm down a little bit from those numbers we've seen from the quarterly stocks. But I am expecting maybe a little bit weaker start again here overnight. So we'll see if that is the case and see what that brings for us tomorrow. If you guys got questions, give us a call. Reach us here at 800-262-7538 or check us out on the web, allendale-inc.com. Hope you guys had a great day today, and we will talk to you tomorrow.